A warm welcome to the latest newsletter from Trade the Easy Way. Hello traders, I'm starting this recording with a look at the 10-year bonds on a weekly chart, and you can see since the Trump election we have come off. So what's that telling us? That's telling us that the markets think a rate rise is imminent, so yields on these 10-year bonds go up the lower they are. So that means the price of the cost of the US state borrowing is going up on the basis that the market thinks we are very, very close to a rate rise. It also means that raising further capital could become more difficult, and if that's the case, then that will creep into corporate bonds as well and create higher costs for companies borrowing. So this is a signal to be very, very wary of. Now, normally the relationship with the bond market and the equity market is actually convergent, contrary to popular belief. But of course, here we are divergent. The Dow has crept up, a couple of sort of weeks of flatness, including last week. But on the whole, the indices are up. In the meantime, this has been coming down. So this is just a word of caution as we get to S&Ps with valuations of close to 17 PE ratio. This is an expensive market. It's not to say we're looking for a crash. It's to say that be very, very careful, because this market is expensive, and we have some issues with the bond market as we get well and truly into December. Statistically, December is normally a good month for equities. I think the statistics is you normally have indices moving up. I think it's about 70% over the last 10 years. I think it's a pretty impressive figure, but that's not to say that nothing in the markets are given, as I'm sure you're aware of. So I'm just on the lookout for how the markets are going to react to this push higher. So let's just take a wider look at the market. So here is the Nikkei, a nice swift, nice decent grind higher. We've broken down from this with it's not a reversal signal, because a reversal signal to me is an immediate close below after you get a new high. We've not had that. We've just had a new high and a move sideways. So hence the reason why I'm just not prepared to call shorts on these indices. I'm just very, very wary of where we are in terms of technical levels. Here's the Nasdaq, which I think is a good bellwether, and you can see we actually have had a sell signal here on Wednesday. So we had a new move, a little gentle grind higher here, and then on Wednesday we closed lower, and Thursday, Friday we came back down to support. So if we start closing any lower, we could at the very least come and test this trend line, which if I script this up, you can see where the trend lines come from. So this support level here at 46.56 is looking as if we're going to get that tested. The question is the market going to hold that and push that back up into this level here, or are we going to continue lower? I have to say at the moment I think we're going to continue lower based on what I've been talking about in the bond. And then of course if you move across into the Dow, we have, you could technically, oh no, that's not a sell signal. We were flat into Friday, flat compared with Thursday's range. I want to say flat. We closed the lower end of Thursday's range. We didn't engulf it. So if this fib level pans out, we are still looking at a potential push into 19,365. However, I think we're at the very least going to be looking at a pullback because of the uncertainty in the Italian referendum. Markets don't like uncertainty, and that is putting in a question mark on the European markets. Now, as a mark of what's going on at the moment, the Forex markets have been open for an hour, nearly an hour, and we've had a 100-point drop from Friday's close on this pound yen. Now we've got this reversal bar here sitting on a fib level, this 50%. If I scrunch this up, you can see we have broken above the July 16 highs, and now we're sitting on it. So I think at the very least we're looking for a pullback into something like 142, with the potential for that to pick up. Or if it is going to pick up, that's the most likely spot, I think, 142. So that's the pivot I'm going to be looking for on the pound yen, and on the pound US dollar you can see we're just knocking our head up into July's low. So this could, now we've got, like the pound yen, we've got a gap down here in this one. If we get any kind of gap fill, 127, this could just start to roll over. This is a major pivot resistance. We've not touched it yet. We're quite. I think one of the issues we're going to be grappling with this week is we are actually quite light on the data front. We've got UK services 9:30 on Monday, Aussie rates Tuesday, European rate decision on Thursday. Nobody is expecting a rate rise in the Europe. It's just a question of what's said in the press conference as usual. Alright, but other than that, we are pretty light on data. So I think all eyes are going to be on the euro. Let's have a look at the euro now. We've had a significant gap down in this one. I was trying to short this last week and it held up, and of course on now we've got the gap down. The reason why I was looking for a short is because I was seeing this as a bear flag, but it held up and we were pretty flat on the weekly chart, very flat on the weekly chart. So we're 100 pips lower on the gap down, looking as if this isn't going to hold. So let's just see what we get exit polls in about 10 minutes, I think. And I'm doing this at 10 to 10 UK time, 10 to 5 Eastern time in the morning. So let's just see what we get. As usual with this, we just need to get Monday out of the way and see what they want to do with this. But the way the markets are behaving at the moment is leading me to think that markets are not going to be happy, particularly with what we saw in the second half of the week on the Nasdaq and the Nikkei. Okay, so bear that in mind. So if dollar strength is going to come into this, I think that this weekly, we closed lower in the weekly chart, but I think we're coming into major support here. 132. Last week's low was 132.50. I see any move into some lower levels here as a potential buy, so I'll comment on that more as the week unfolds, because I'm not convinced at the moment. I certainly don't want to short oil, but I'm not convinced oil can hold up here. I think we may see some more mileage, but that's a tough area. That's a big push, so I would be looking to buy a retest of 49.50 or 50. I'm not going to fight the trend because that's such a significant push higher. I'm just concerned that this is a major resistance area, and we're seeing potentially some dollar strength. Alright, let's quick look at gold, and then I'll leave it here for now. And then on Traders Roundtable, it's going to be a very comprehensive look at stock sectors and the Forex. Okay, so the weekly chart still closed lower. I think we could still come lower still. Safe havens like bonds and gold are not yet being bought. Let's have a look at the daily on this. Okay, so on this fib level, fibs are taken from autumn 15 lows into July, this summer's highs. So we had a nice move up into 1375, and we're currently 1177, holding this fib zone. This is the fib zone. So holding this zone with the potential to get back up to those levels there. And given that we have got a degree of fear coming in the market with the Italian issue, that could well get bought. So any dips into 1175 or lower than that, 1170, is a potential to get bought. Okay, all this will be followed up at Traders Roundtable, and I will be monitoring the euro for the free videos, but more on that as the week unfolds. Alright, enjoy what's left of your weekend and look forward to seeing you on Monday.